Money on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. You gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy, Reckless Raidinero. We are back at it again late in the evening on Friday evening. Yes, I did not record on Thursday evening. I recorded on Friday evening. And, it's going to be a little different kind of episode. I took naps and slept and rested and relaxed and recuperated. But I didn't want to miss the week. So this is an update on the Robinhood portfolio, which is our small building, slow growing portfolio. Actually, it's pretty fast growing, but it's small portfolio, smaller of the two, on the week of August 17th. And we're going to recap how it went because this was a rather traumatic week. I mean, we got towards the end of this week thinking that it was over for Ulti. It's over for MicroStrategy. It's over for all the covered call ETFs. People were jumping ship, selling off all their shares. And we're gonna go ahead and have the conversation and talk about it. But before we get into that, I want to make sure that you guys hit that like button on the way in. If you have not subscribed yet, I would invite you to go ahead and formally join the Wolfpack by hitting that subscribe button down at the bottom. Right next to that subscribe button is going to be a bell notification. You want to click that, make sure all are on, because I promise not to flood your feed, even though apparently that's what the algorithm on YouTube wants. They want me flooding the feed. So I'm going to not do that. Like, that's just not what I do. I don't live here. I don't have to live here. This isn't even a monetized channel. It's just me tracking my journey, not financial advice. I just like talking about money. It seems like of all the things that people distract themselves with, a lot of stuff, I'd say damn near everything rolls back to the money. So that's what I'm going to talk about on this channel. But let's go ahead and jump right into it. Last thing I ask is that if you guys find some gems in here that you are able to utilize, don't forget to share the video because it helps me get out into the algorithm. Also helps me grow the channel. So let's jump into it. Boom. Hold on. Got to get down to micro machine size over here. Let's do this. Okay. So what we've got going here is the Robinhood portfolio. I always make sure to give my receipts before we jump over into Snowball Analytics, which is how I track this. But as we can see, it's after hours. We were up 5.34% on the day. In the after hours, it's up 0.13% since close. We are looking at, we're back above $6,000 in the portfolio, which is awesome. Like, that makes me happy. I like to go over the shares of what's actually in there because looking at this is the actual portfolio. So there's no discrepancies there. Like, this is my portfolio. It's got my stuff that I'm looking at. We've done some tweaks and we're going to talk about it. So what do we have so far? We have Hood, we have 5 shares. We buy 1 share a month. We've been with the platform for 5 months. Therefore, we are holding 5 shares and growing. And you know what? I'm going to actually just start jumping into these positions so that way we can talk about where we're at here. My average cost for my Hood shares is $70.97. That puts us up 54.23% on this position. Gives a little bit more context when we look in it from this angle on some of these shares. And I'm going to show the ones that we're not going to look at in Snowball Analytics because my high yield ETFs, it skews because it'll show that I'm like super underwater when you're not necessarily super underwater when you factor in the distributions. And in this portfolio specifically, everything is still getting cycled through this portfolio. So there's also that. The other one that I want to show is my moonshot. That's the only moonshot that I've got, but we're about to hit FOMO mode on this from a strategic perspective. And I wanted to show that it's our open door. Our average cost on here is $2.19. We are up 137.98%. I'm super upset that I only bought those first 50 shares. I really should have just got into a position of 100. What I'm planning on doing with this, though, is I'm planning on buying it up to about $10, $15. And I'm going to just start getting as much as possible on my open door. And actually, we might tap the margin on this just because of the volatility on it. It's volatility to the upside. Obviously, we've had a plus 44%. Like it's just ridiculous. It's amazing what getting rid of a CEO can do for you. And then we have Ulti. We have 794 shares and 794.92 shares. So right at 795 shares of Ulti. We switched out Hui with How. HOOW, we switched to the weekly, and we are at 14.43 shares on that. I'm not sure what day they paid because I don't know that I've gotten a dividend on that yet. Have I got a dividend on that yet? Nope, because we literally just bought on the 18th. So that was Monday. So I think, if I'm not mistaken, that pays on Monday. So I think I bought it the day that it paid. So we haven't gotten a distribution from that yet, but we do have 14 shares, which I'm kind of excited about. I think up until the end of this month, I think we're probably going to buy some more open shares. And honestly, rolling into Monday, we might actually be doing that with our distribution from Ulti. I'm not going to do that. We're going to follow the cycle. If I buy open, I'm going to go ahead and do it on margin because I've got a little bit of a window in my margin that I can tap in on that and potentially, grab some more shares. It's volatile though. So I know as soon as I buy, we're going to have a pullback, and I should have just waited for the pullback. So I might just wait and buy on schedule like I have been and just wait till the beginning of the month and do that, because I was just going to add buying a share of that in with my beginning of the month stuff to buy, because I have to buy a share of Hood at the beginning of every month. And last month we bought open and the Hood shares, and that's kind of worked out. We're going to follow the schedule because I can get some more How come Monday, and then hopefully we'll be able to, whatever How pays off will feed back into Ulti. It's just really difficult doing this with the share amount that I have, which isn't actually that bad. We had a $79 payout because they paid us another dime bagger, and can't complain. Like, I cannot complain. Ulti's been performing super well. This portfolio is performing super well, and to codify that, we're gonna jump back in here. I'm gonna pull this down and bring this up another screen. Stop a screen, share screen. We'll go to the application window and pull up our Snowball Analytics. So over here, let's take a look at it, because it's only showing the profile for the high yield stuff. So out of that portfolio, the high yield accounts for $5,426.24 of it, which is pretty awesome. And that also, there's a couple of things that we look at up here. We look at our total profit. We are up 20% in total profit. And that is factoring in the distributions, which we are reinvesting the distributions. The other thing that I really look to, and I'm kind of driven by, is our passive income, which since Ulti dipped and kept us that dime distribution, we are now at 108.54% in our passive income percentage, which is above 80, which is my happy place. So we're still there. That's putting us over the next 12 months looking at $5,858.83. We've got our dividends chart from when we started. So we started this back in February. We had a $1.50 dividend that month. Going into March, $25. Going into April, $83. May, we jumped up to $189. Going into June, we hit a $228 basically. Then July, $304. Moving over into August, so far we have collected $309, but we will be eclipsing as these dividends are growing every month, which is pretty awesome. On our tracker, it's showing with doing what we're doing right now, we have a target of $30,000 because this is our lifestyle portfolio. So I don't need as much as I need in the utilities and staples portfolio, because this is just covering the fun money. And I figure $30,000 in fun money of just fun money. And I understand some of the gurus are out there like, I spend $30,000 a day. I don't care. I don't need to. Like, I don't have $30,000 a day worth of stuff that I want to do. Like, it's ridiculous. So, obviously this is coming from the perspective of like real people in the real world that aren't internet personalities that have to be seen and are trying to keep up with celebrities. I'm not necessarily trying to do that. I need like one fun car to drive and a nice car to get around in, and my stuff and my cats and vacation time and having my time and being able to do what I want, which would basically be go to the gym and hang out with my cats. So I don't need like a bunch of stuff. I like to be able to hang out with my friends when we go do stuff. And apparently, per the current reports, having friends is expensive. I can kind of understand that. And I know me and my friends aren't doing $30,000 worth of stuff a year. So it kind of just puts me in a space where I'm able to navigate the way that I want to with the people that I want to navigate with. I don't need to be seen everywhere or be everywhere. So realistically, this is my target for the fun money. I also have another portfolio for my staples, which is my mortgage, utilities, all the stuff that you need to exist and get around. And yeah, so let's go look at the portfolio and take a look at the holdings. So our total profit on how we are down 3.27%. On the daily, we are up 3.54%, which is, that actually, if you factor in the day, we're kind of zeroed out. Like, that's not a bad spot to be in, actually. Like, those numbers look decent to me. The interesting one is our Ulti. So Ulti, our average cost per share is $6.27, but after it's all said and done in the wash, we are still up in total profit on this position, which makes me feel a lot better, because you look at those red numbers and you always got to go and cross-reference it and see where you're at. And considering that I am not reinvesting, like, this is the landing for me, which means that like the money that comes into the account from outside of the account goes into the Ulti position. But Ulti itself, those distributions are going in to pay for our HOOW, our HOW position. So, like, we're up 1.84%, which is by the skin of the teeth, but we're still in the green. The portfolio overall total profit is at 0.98% on the holdings that we currently have sitting in here, which is cool. We're still at break even. Looks doom and gloomy. A lot of people are talking about jumping ship on a lot of positions, and the Robinhood portfolio is looking good. It's been good that it's not directly correlated to my income portfolio, because it used to be like no matter where I looked, it was all red. If it was red, like Bitcoin's down, the income portfolio is down, the Robinhood portfolio was down. And now that we've got this kind of themed around Robinhood and our support thereof of the platform, we have days where, crypto might be taking a hit, but Robinhood's running, Ulti's running, which is cool. And yeah, so that's kind of where we're at, kind of what we're looking at here. It's not necessarily the best idea to make a bunch of emotional moves, especially when, to make a bunch of emotional moves, especially when you're looking at things that are not necessarily going to last indefinitely. Now, obviously, we got some good news from the Fed in regards to interest rates coming down. They're giving guidance for September. They're going to start, cutting interest rates, which is cool. But I don't like being reliant 100% on somebody else, like cutting interest rates. Like, in my opinion, I'm like, if you got to live in a world of cheap and free money and that's the only way you can navigate, like, you should probably figure that out, because the world doesn't revolve around cheap and free money, and it definitely won't for too much longer. We're going through a wealth transfer. There's a big transition happening. And, once we get back to a state to where people are kind of hankering for more sound money, that means that you can't just have indefinite free pretend money. And that's going to not go well for a lot of people who are not working to get on the right side of that trade. But, we'll leave that for another conversation. What we're looking at here is this benefited the market. The market did its thing today. And I'm looking forward to the end of the year, but not necessarily factoring in the Fed rate cuts. Like, I'm positioning myself regardless. And the thing to keep in mind is the market goes up 70% of the time. It goes down 30% of the time on average. It's up 70%, down 30. So I have no problem riding and buying an ulti dip, because I have my areas where I would stop and cut bait on the position to sit in cash or transition it over to something else, provided it gets down to where I'm down 10 to 15%, probably closer to 15% with the way that the market is. Because when the market goes down, this time it was a week. It was really more or less a week. We had a week of bad numbers. And then we had a hard turn at the end of the week. So, from that perspective, it's like, how do you even time that? Like, what are you, like, I don't even understand how people, like, you're not given enough time to jump ship. It's just like, well, if you didn't start jumping ship Monday, by the time you got to Friday, it's like, okay, well, if I was going to sell it, like, this would have been the time, and the price turned back around, and like everything's on the uptrend again. And it's like, okay, so better off buying, which is what I was doing over in the income portfolio. And, we had our drip go through today, which also pulled the cost average down over on that portfolio. This one, we'll take a look at what it's looking like Monday. Come Monday, what I've been doing is I'll buy one share of How, because it's expensive. And then off that share, off that one share of How, I will then, whatever change is left over, I will put into ulti. And yeah, that's been working pretty well thus far. We're getting ready to, once my portfolio is set, once I get my ulti position finalized over in my main portfolio, I'm going to turn drip off over there. And which, honestly, I might actually do that pivot after this video, because I'm within range now. Like, I can manually buy ulti if I want to, but like, also I've got like $5,500 in margin sitting over there for my debt payoff. And I know we're rolling into the end of the month, but we've got one more payment for the end of the month of August. And I think I'm going to have that payment actually go towards the debt also, with whatever we get from Misty, because then I got to decide what I'm going to do with that position as well. Because depending on what that payment looks like when they announce it, if it's ugly, I might go ahead and make that pivot over to a weekly position for a chunk of that. And I think that's what we're probably going to do. I still want it MSTR backed or Bitcoin backed in that position, but I also don't want to deal with having whole bad months anymore. And I've come to the conclusion that the weeklies do have an advantage. Like, you'll get a bad payout, they can get positioned poorly for a week. But if you're positioned poorly for a week, that doesn't mean you have to carry those same calls over to the next week or that same deal over to the next week. So, you know, you can have a bad week out of 4 weeks versus all 4 weeks being bad because you're locked into that call monthly. Like for some of these positions, it just doesn't seem to make too much sense. Like I'm still bullish on Misty in regards to the bull run, but I think that I only want about 500 shares of it in the portfolio right now, and then being able to like move based on distributions going forward, because honestly, like MicroStrategy has been taking a beating, like a worse beating than Bitcoin has. And, you know, there's some weekly options on Bitcoin that are also paying very well, and we're going to be exploring those as well. Now that's stuff for the other portfolio. For this portfolio, though, it's full steam ahead. Like I don't have the problems with this portfolio. Does it have volatility? Absolutely. But the pivot on that is with the ulti and how mix, we've like ratcheted it back up into the range that I want it to be. And this one was already in the sweet spot anyway, but getting that double weekly income is going to be a little bit more advantageous. And again, Roundhill has the ability to like switch their call strategy up on a weekly basis versus the monthly basis. So like while there is volatility, I have less capped upside. And I am going to run the same strategy that I did when I was using PLTW and COIW, in the sense that, and I might be adding COIW back into this portfolio because now that we're in this horrendous dip for the crypto industry and it's kind of bouncing back, buying those dips is very advantageous. But the thing that we're going to be doing with HOOW will do the same thing, as like as those positions go up, because we don't have the capped upside on these on the HOOW. As we get up to about 30%, I will be like cutting some of that position and moving it over into ulti, and then using the additional ulti obviously to buy that position back up, especially if we're in a position like what we are now, where we're in a dip. Being in a dip is good for these types of positions, because yes, they do dip hard, but like you buy on those dips, especially if you believe that it's going to go back up, which is the other reason, because MSTR isn't a dip. It's very depressed / bearish right now. It's just been getting beat on, and being able to get in on those dips on like MSII or MSTW. I haven't necessarily picked which one that I want to do. I'm kind of leaning towards MSII because it's a hybrid. So it has the calls plus a little bit less cap on the upside, because they do have the leverage and hold the shares as well. And it's kind of supposed to be the best of both worlds. And I'm like, well, I don't want to just go straight leverage play. I want to do the hybrid. And since MSII is doing the hybrid, I want to be in that position because it's a weekly payer. It's doing the hybrid. It's performing well. And yeah, it's kind of what I'm doing and kind of what I'm wanting already. So that way I get both. But in this portfolio, we've got that ulti Roundhill mix, and it's working really well. Like I've really liked the performance of this portfolio even during the downturn. And with that leverage, it's like you sell those peaks, and for me it's going to be around 30%. Generally speaking, if I was just in a position, I don't look at like cashing anything out or paying anything off until I'm around 100% in a position. But with the leverage, you're adding leverage in. So I'm looking at 30, and at 30, it's like, cool, we'll sell some of this off or do like a 50% sell off and then bulk the ulti position up because that's the stalwart position, and then continue buying from there forward and see what that looks like. Because one of the things that I learned early in this portfolio with PLTW and COIW is like actually managing that position and actually doing those sell-offs as it hits about 30%. That way when it tanks, I can always just sell off a little bit of ulti. It's like, cool, like I'll sell off a couple of 100 shares of ulti and then move that over and buy those dips. So that way I can buy down or sell 50 shares of ulti at a time and be like, hey, like if it keeps dipping, if it dips next week, I'll sell another 50 shares of ulti and like buy down into that dip, because I'll have like a buffer system in there where it's like, hey, like I rode this up and had X amount of profit that like I shifted over into ulti. So that way, if we have a dip, I can now go do that. So that's what we're looking at. The HOOW, it's a more managed position. I will probably, actually, I probably won't. I'm not going to bring Hui back. I'll switch that out with something else that's a weekly. Like I like my weeklies. I'm not going to lie. Like it's just what it is. Like the weeklies are just kind of where it's at for me. And it's not that I need the income on a weekly basis. It's just like when they mismanage, they at least only mismanage for a week versus the entire month. I don't like catching bad numbers on the monthly. And I also don't like the capped upside, because then it's like, okay, so this position took a hit. It takes forever for it to come back up. Like it's like you have to go back up and stay back up in order for it to even come back. So that's kind of where I'm at with it. We're gonna end it on that. I hope you guys got some value out of this. Sorry that it's showing up a day late. Hopefully you guys fortified the bag on Friday and you were able to, make some good investments, make some good decisions. And if you haven't already, go ahead and like that video. Don't forget to hit that subscribe. If you haven't, go ahead and join the Wolf Pack. There's plenty of room, and we're not trying to get rich over here by ourselves. Last but not least, share the video. And yeah, until next week, this has been another Robinhood portfolio update. And yeah, we'll catch you next week. It's your boy Reckless Raid and Arrow, and I'm out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.